Welcome back to Financial Wisdom Academy. Today we are going to be doing a deep dive into why everybody needs to understand money, finance, and investments to really gain financial freedom. We will be using financial management for small businesses as our guide today. So let's just jump right in.
Sounds good.
So one of the things that really stood out to me in this book was this fact that something like 80% of businesses in the U.S. are sole proprietorships. But get this, they only bring in about 10% of total business sales.
Yeah, that's a really interesting fact.
Yeah, and it got me thinking,
It is.
if we want to really understand the path to financial freedom, maybe we should be looking at what the corporations are doing
Exactly.
because they are the ones.
Yeah, corporations are fewer in number,
Right,
but they account for a much larger slice of the pie
right.
when we are looking at the whole economic picture.
Yeah, for sure.
And financial management for small businesses does a good job of laying out, kind of the pros and cons of each type of business structure.
Yeah. Now, I know that corporations get a bad rap for something called double taxation. Can you explain what that is?
Yeah, so double taxation basically means that a corporation's profits are taxed twice. So first at the corporate level,
Right.
and then again when those profits are distributed to shareholders as dividends.
Okay, so that's a bummer.
Yeah, it's one of the downsides you have to kind of consider.
Right. But the book also mentions that there are some potential tax advantages, too.
Yeah, there are some ways to mitigate the tax burden when it comes to corporations.
So, for example,
For instance, salaries paid to employees, including owners who work for the corporation, are deductible expenses
right.
for the business, so that can lower their taxable income.
Okay.
And then you also have things like qualified dividends, which are taxed at a lower rate than ordinary income.
Okay.
So it's not all doom and gloom on the tax front.
Right. So even with that double taxation thing, there are some strategies you can be aware of.
Absolutely. And that's why it's crucial to understand, kind of the nuances of each business structure and what's going to work best for your particular situation.
Yeah. And this book really breaks down all of that really nicely.
Oh.
One of the other things it mentions is something called the principal agent problem. And that sounds a little bit intimidating.
It does sound a little bit intimidating.
Can you break that down a little bit? What
Sure.
does that even mean?
So the principal agent problem arises when the interests of the owners or the principals of a company are not aligned with the interests of the managers or agents who are running the show.
So it's kind of like a conflict of interest almost.
Exactly.
Where the people who are in charge aren't necessarily acting in the best interests of the owners.
Exactly. And this is where financial literacy becomes so important,
Okay.
because understanding this problem can help you as an investor or as a business owner implement mechanisms to kind of align those interests
Okay.
and make sure that everyone is working towards the same financial goals.
So financial freedom isn't just about like picking the right investments. It's about really understanding the underlying systems in place.
Absolutely.
Yeah.
And financial management for small businesses, I think, provides a really solid foundation for developing that understanding.
Okay, so we talked about the importance of understanding the different business structures. What else does this book kind of highlight as being essential to achieving financial freedom?
So I think one of the other key points that it makes is that financial statements are like a roadmap to a company's financial health.
Okay.
But it also cautions that they don't always tell the whole story.
Right. It's like having a roadmap, but you don't know how to read the symbols. So you need like a key.
Exactly. And the book kind of gives us that key in the form of something that it calls spell ratios.
Spell ratios. What is spell?
So SPEL stands for solvency, profitability, efficiency, liquidity, and leverage.
Okay.
And these ratios basically provide a deeper dive into a company's financials. They help you understand their ability to pay their debts, generate profits, manage assets effectively, and maintain a healthy financial structure.
Okay.
So they are really important to look at.
So it's like a set of financial x-ray specs. So you can really see through
Yeah.
the balance sheet and the income statement and all that.
Yeah, that's a great way to put it.
Okay.
So for example, let's say you are looking at a company's profitability. The basic profit margin on their income statement might look pretty good, but if you dig a little deeper and look at their efficiency ratio, specifically their inventory turnover, you might find that they are actually holding on to inventory for too long.
Okay. So even though they are making a profit,
Right.
they might be tying up too much cash to slow-moving inventory,
Right.
which could actually hurt their long-term health.
Exactly.
Yeah.
And that's where the power of these spell ratios comes in. It helps you connect the dots and uncover potential weaknesses and ultimately make more informed investment decisions. So
Right.
they are really important.
They go beyond just the basic financial statements.
Right. Absolutely.
Yeah.
Financial management for small businesses argues that by using spell ratios, you can analyze trends over time. You can compare companies within the same industry and ultimately make smarter choices that are going to align with your financial goals.
Okay, so we talked about the different business structures. We talked about using these spell ratios to analyze financial statements. What's next on our journey to financial literacy?
So the book also dives into the concept of present value, which is a really powerful tool that can help you make informed decisions when it comes to investments.
Okay, that's one that I've always kind of struggled with. So
Yeah, it can be kind of a tricky concept.
yeah, so can you break it down like in a way that like even I can understand it?
Sure.
You know?
So let's say you win the lottery and you are given two options. You can take a lump sum payment of $500,000 right now, or you can receive $50,000 a year for the next 12 years. Which option would you choose?
Well, I mean, it seems like getting $50,000 a year for 12 years, you'd end up with more money.
That's true, but it's not the whole story. So present value takes into account what we call the time value of money.
Okay.
And basically what that means is that a dollar today is worth more than a dollar tomorrow because you can invest that dollar today and earn a return on it.
So it's not just about the amount of money. It's about like when you receive it
Exactly.
and what you can do with it over time.
Precisely.
Oh.
So by calculating the present value of those future payments, you can actually compare them to that lump sum offer
Yeah.
and make a more informed decision based on your financial goals and the potential returns that you could earn.
Wow, that's actually really interesting. So present value like this can be applied to all sorts of financial decisions, not just like lottery winnings.
Absolutely.
Yeah.
Whether you are evaluating investment opportunities, comparing loan options, or even just making big purchases, understanding present value can help you make choices that maximize your financial outcomes.
Okay, this is really starting to make a lot more sense. But the world of finance is full of uncertainty, right?
Yeah.
So how do we navigate that?
That's where understanding the difference between risk and uncertainty comes in.
Okay.
And financial management for small businesses actually dedicates a whole section to this important topic.
So what is the distinction between those two things?
So think of it this way. Risk is like playing poker.
Okay.
You know the cards, you know the odds, and you can make calculated bets based on that information.
Right.
Uncertainty, on the other hand, is like playing poker in the dark. You don't know the cards, you don't know the odds, and you are essentially making decisions blind.
So with risk, you can kind of at least assess the probabilities.
Right.
And with uncertainty, it's much more unpredictable.
Exactly.
Yeah.
And the book really emphasizes that recognizing this distinction is crucial for making sound financial decisions.
Okay, so what's like the key takeaway from understanding this difference?
Well, it's about acknowledging that we can't eliminate uncertainty entirely, but we can approach it strategically.
Okay.
So, for example, diversifying your investments can help you mitigate risk
Yep.
by spreading your bets across different asset classes.
So even when we are faced with like the unknown, we can still make informed choices
Absolutely.
that could increase our chances of success.
That's right. And that's a key element of achieving financial freedom.
This has been so helpful, this deep dive. And we haven't even scratched the surface of everything this book has to offer. But we are going to take a pause here,
Okay.
and we'll be back with part 2
Sounds good.
of our deep dive into financial management for small businesses. So stay tuned.
Welcome back to Financial Wisdom Academy. Hope you're ready for some more insights from financial management for small businesses.
You bet I am.
Yeah.
Last time we were talking about, business structures and financial statements. We even dipped our toes into the world of present value calculation. So yeah, my brain is definitely in finance mode now.
Excellent. So today we're going to keep building on those foundations. Remember how we discussed the importance of analyzing a company's spell ratios to get a clearer picture of their financial health?
Oh yeah, those financial x-ray specs. All about solvency, profitability, efficiency, liquidity, and leverage, right?
That's right. And one of the things that financial management for small businesses really drives home is that analyzing these ratios over time can reveal valuable trends that might not be obvious from just looking at a single year's financial statements.
So it's like tracking a company's fitness progress, right? You wouldn't just look at their weight on one day. You'd want to see how it changes over time to get a sense of their overall health.
Precisely. Let's say you're looking at a company's liquidity, their ability to meet short-term obligations. You might notice that their current ratio, which measures current assets against current liabilities, has been steadily declining over the past few years.
Hmm. That sounds like a red flag. It could mean they're having more trouble covering their short-term debts, right?
Exactly, and that's a signal to dig deeper. Maybe their inventory turnover is slowing down, or they're having difficulty collecting payments from customers. By analyzing those spell ratios over time, you can spot these trends and make more informed decisions about whether to invest in that company or not.
Okay, so even though, past performance isn't necessarily indicative of future results, looking at those trends can give us some valuable clues.
Absolutely. It's like having a financial crystal ball.
Hmm.
But instead of seeing the future with certainty, you're looking for patterns and indicators that can help you make smarter choices.
I like that analogy. So it's about using the information we have to navigate uncertainty. Which brings us back to that concept we discussed earlier. Financial management for small businesses really stresses the importance of understanding that difference between risk and uncertainty.
It does, and the book argues that once you grasp this difference, you can start to approach financial decisions with a more strategic mindset.
So instead of getting caught up in fear or making impulsive choices based on, whatever, we can actually use our understanding of risk and uncertainty to make more calculated decisions.
That's right. Remember, risk is about knowing the odds. It's like flipping a coin. You have a 50-50 chance of getting heads or tails. Uncertainty, on the other hand, is like trying to predict the weather a year from now. There are too many variables to calculate the odds accurately.
Right. So how do we even begin to make financial decisions when faced with so much uncertainty?
Well, the book suggests that diversification is a powerful tool for mitigating risk. Instead of putting all your eggs in one basket, you spread your investments across different asset classes, industries, and geographical regions.
Okay, so even if one investment doesn't perform as well as expected, others might pick up the slack and help to kind of cushion the blow.
Exactly. It's about creating a portfolio that can weather market fluctuations and potentially generate more consistent returns over time.
Okay, diversification makes sense. But I'm guessing there are other strategies for navigating uncertainty as well.
Absolutely. Financial management for small businesses also highlights the importance of having a long-term perspective when it comes to investing. Short-term market swings are inevitable. But if you have a solid investment plan and a clear understanding of your financial goals, you're less likely to get spooked by those temporary dips in the market.
So it's about staying focused on the big picture and not getting caught up in the day-to-day noise.
That's right. And that long-term perspective ties in perfectly with another key concept that the book explores: present value.
Okay, present value, we touched on this earlier, but I think it's worth revisiting because it can be kind of a tricky concept. Can you remind us what it's all about?
Sure, remember the lottery example we talked about?
Yeah.
Choosing between a lump sum payment now versus a series of smaller payments over time. That's all about present value. It's the idea that money today is worth more than the same amount of money in the future, because you can invest it today and earn a return.
Right, and we can use present value calculations to compare those different options and make the choice that aligns with our financial goals.
Exactly. Let's say you're considering investing in a new piece of equipment for your business. You can project the future cash flows you expect to generate from that investment, and then calculate their present value to see if it's worth the upfront cost.
So instead of just looking at those future cash flows in isolation, we're bringing them back to their present-day value, taking into account the potential returns we could earn in the meantime.
That's right, and this applies to all sorts of financial decisions. Financial management for small businesses even uses present value calculations to compare the costs and benefits of leasing versus owning an asset.
Oh, that's interesting. So present value can help us make those big decisions
Right, yeah.
about whether to lease or buy a car, a house, or even equipment for our business.
Absolutely. It provides a framework for analyzing those choices from a financial perspective, taking into account factors like opportunity cost appreciation and potential tax implications.
Okay, I'm starting to see how present value is a really versatile tool. It can help us compare investment opportunities, evaluate loan options, and even make those big lease versus own decisions.
And the best part is once you understand the basic principles, present value calculations are relatively straightforward. There are even online calculators and spreadsheets that can do the heavy lifting for you.
That's good to hear. I'm not exactly a math whiz, but I'm definitely willing to put in the effort to understand these concepts. It's all about empowering ourselves to make smarter financial choices, right?
That's the spirit. Financial management for small businesses is all about equipping you with the knowledge and tools you need to take control of your financial destiny.
And you know what this deep dive is really making me realize? That financial freedom isn't just about having a lot of money. It's about understanding how money works, making informed decisions, and building a solid foundation for long-term financial well-being.
That's a great insight, and that's exactly what this book is all about.
Okay, I'm ready to keep exploring. What other gems of wisdom does financial management for small businesses have in store for us?
Well, we've talked a lot about analyzing businesses and making investment decisions, but the book also offers some valuable insights into managing personal finances.
Ah, yes, the stuff that directly impacts our day-to-day lives.
Yeah.
I'm all ears.
One of the most practical takeaways from the book is the importance of creating a budget and sticking to it. It sounds simple, but so many people struggle with this.
Yeah, I'll admit budgeting isn't exactly my favorite activity, but I know it's crucial for staying on track financially.
The book provides a really helpful framework for creating a budget that works for you. It starts by tracking your income and expenses so you can see where your money is going.
Right. It's like shining a spotlight on our spending habits, those little leaks we might not even be aware of.
Exactly. Once you have a clear picture of your income and expenses, you can start to identify areas where you can cut back and save more.
So it's not about depriving ourselves, it's about making conscious choices about where we want our money to go.
That's right. And the book emphasizes that budgeting isn't about restriction, it's about empowerment. When you have a plan for your money, you can spend it with confidence and intention, knowing that you're working towards your financial goals.
Okay, that's a much more positive way to think about budgeting. I'm starting to see it less as a chore and more as a tool for achieving financial freedom.
And speaking of financial freedom, financial management for small businesses also delves into the importance of investing as a way to grow your wealth over time.
Now investing can feel a bit intimidating, especially for beginners. Where do we even start?
The book provides a great overview of different investment options, from stocks and bonds to real estate and even starting your own business. It explains the risks and potential rewards of each option, helping you make choices that align with your risk tolerance and financial goals.
So it's not about picking the hottest stock or following the latest investment trends. It's about understanding the fundamentals and making informed decisions.
That's right, and the book stresses the importance of having a long-term investment strategy. Just like we talked about earlier, it's about riding out those market fluctuations and staying focused on the big picture.
Wow, this deep dive is really packing in the valuable insights. We've covered business structures, financial statements, present value, risk, and uncertainty, and now budgeting and investing. My head is spinning, but in a good way.
It's a lot to take in, but remember, financial literacy is a journey, not a destination. The more you learn, the more confident and empowered you'll become in managing your finances.
And that's exactly what Financial Wisdom Academy is all about, empowering you to take control of your financial well-being.
Absolutely. But for now, let's take another pause and give you a chance to digest everything we've covered so far. We'll be back soon with part 3 of our deep dive into financial management for small businesses.
Can't wait. See you then. Welcome back to Financial Wisdom Academy. We're wrapping up our deep dive into financial management for small businesses and really exploring why financial literacy is so crucial for everyone.
Yeah, it's been quite a journey. We've covered a lot of ground, from understanding different business structures and analyzing financial statements to the power of present value calculations and navigating risk and uncertainty.
You know, it's amazing how all these concepts kind of connect and build upon each other.
That's right. Financial literacy isn't just about memorizing facts and figures. It's about understanding the underlying principles and how they apply to real-life situations.
Yeah, and that's what we've been trying to do in this deep dives, right? To connect the dots between the theory and the practical applications.
Exactly. We've talked about using spell ratios to analyze a company's financial health, applying present value calculations to compare investment options, and even the importance of creating a budget and sticking to it.
But I think the biggest takeaway for me has been the realization that financial freedom isn't just about having a lot of money. It's about making informed decisions that align with your goals and values.
That's a powerful insight. It's about taking control of your financial well-being no matter what your income level or financial situation might be.
Exactly, and that's why financial literacy is so empowering. It gives you the knowledge and tools to navigate the complex world of finance and make choices that support your long-term goals.
Financial management for small businesses really emphasizes this point. It's not just a textbook for business owners. It's a guide for anyone who wants to take charge of their finances and create a more secure and fulfilling future.
And one of the things I really appreciate about this book is that it doesn't shy away from the emotional aspects of money.
That's right. We often think of finance as a purely rational subject, but our emotions play a huge role in how we manage money.
Oh, for sure. Fear, greed, and even just a sense of overwhelm can easily lead to poor financial decisions.
Absolutely. And that's why financial management for small businesses encourages readers to develop a healthy relationship with money. It's about recognizing our emotional biases, understanding our financial values, and making choices that align with our overall well-being.
So it's not just about crunching numbers, it's about being mindful of our emotions and making conscious choices that support our financial goals.
Exactly. And that's a message that resonates with me deeply. Financial freedom isn't just about achieving a certain net worth. It's about creating a life where you feel confident, secure, and empowered to pursue your passions.
I think that's a great note to end this deep dive on. Financial literacy is a journey, not a destination. It's about continually learning, growing, and making informed choices that support our financial well-being.
And remember, resources like financial management for small businesses can provide valuable guidance along the way.
Absolutely. So if you're ready to take control of your finances and start building a brighter financial future, we encourage you to check out this fantastic book.
And don't forget to subscribe to Financial Wisdom Academy for more deep dives into the world of finance.
Thanks for joining us on this journey into financial literacy. We'll see you next time for another insightful exploration of the world of money, finance, and investments.